Good afternoon, everybody. Welcome to TraderMerlin Show. It is Monday, the 27th of June today, getting into the tail end of the month, and certainly some nice price movements, although it wasn't the most exciting day, but at least there was some volatility intraday that you guys had opportunities to trade off of. Shout out to everybody. I guess it's a Russian show today, as you can see. I've got Zdorovie, the Russian crisis. Figure spoke a little Russian. Maybe I should have some vodka today, but I'm not drinking any vodka today. No alcohol today for me. We'll save that for Friday. Or maybe a little bit of trivia on our Tuesday or Thursday night if I decide to go out this week. So let me start off with the overall markets. I'm going to go into one listener question from Les, who sent that one in. So hello, good to see you, Les. By the way, Les, you're slacking, buddy. There's like 15 people who commented before you. Yeah, got to get up. We set that alarm clock, pal. All right, let me just walk you through some of the economic data because it's all going to revolve around that today. Here you can see at the top we have the G7 meetings, which of course is why I made the topic for the show. Zdorovie, the Russian crisis, because a lot of the G7, which if you don't know who the G7 are, it's kind of 7 major countries. You're talking US, Canada, France, Germany, Italy, Japan, and the UK. Really basically just saying how they're positioning themselves going forward, what their thoughts are on the economy, and of course what they want to do about Russia. And there is a lot they want to do with Russia. I'll get into more of that in a second, but what's noteworthy for us here in the US is durable goods orders. Again, these are heavy, long-lasting items, refrigerators, microwaves, TVs, very good with regards to orders for that. So that's actually a very nice thing for our markets, which I thought might be more well-received today, meaning there's consumption and purchasing versus, GDP declines and lack of retail sales. Looks like there's people buying this stuff. And more importantly, notice pending home sales. You can see that the previous month, let me get my pen out here just so I can highlight some stuff for us. And where is it? Where is my pen? Over here. Oh, great. I guess I can't draw for you today because my pen doesn't want to cooperate. Very, very bizarre. Okay, I will... All right, no drawing today. I guess we'll forego that one. We talked about the surprise that we had on new home sales, which for me was substantial to see such a gigantic jump up in new home sales. The previous number for pending home sales was a decline of 4%. And they were expecting it to be a decline again, but only 3.5%. Now, deep down in my gut, I was looking at that new home sales number, which shattered all expectations. And I was thinking, you know what, pending homes is probably going to be a pretty good number as well. I did not think we'd actually come out as a positive number, just that things were slowing down, but not as much as thought. This is actually a very good sign for our market, which means that people are still buying homes. It increased by 0.7%, as you can see, which is a far cry better than a negative 3.5. Did I mess up? What did I do now? TJ, what did TJ do? Hey, Obioma, good to see everybody. Why is this important? Well, obviously we know that there's going to be a mad dash rush for everybody to buy a home. And I'm seeing it in the neighborhood. I went to a couple open houses this weekend. It was just kind of interesting seeing the amount of homes that have popped up in my neighborhood in the past couple of weeks, asking, in my opinion, ridiculous prices, and it's prompted me to think about potentially unloading my house as well. Sell into that momentum, right? Like some here, it says, Randall says, we're still on top of the waterfall and picking up speed. Yeah, oh, there you go. Thanks. You're right, Big Gab. I forgot it was a pen. And who knows, Randall? I'm assuming, Randall, you're in real estate, and... It's interesting. I was talking to my father. My dad and I are selling a piece of property up in Redding, California. And I had talked to him about, now is, I think, maybe even a little bit late to be selling, but still you're selling near the apex. And it's interesting because he says, everybody in my industry is saying, we're going higher. And I was like, well, how often do you see a real estate agent say, man, we're crashing. This is the end. You kind of don't want to do that. I mean, if you're a car buyer, you don't want to be going, oh yeah, you don't want to buy this turbo diesel because electric's the way to go. Why would you buy this car, right? You wouldn't deter people from making business transactions with you. So I thought that would be true. Larry says, and then you'll have to rent. Good luck. True. I'm okay with that. I guess it gives me the opportunity to go anywhere in the world I want and rent for a little while. So that's not to say I have to rent in the United States. I can still do the show from Thailand if I were to choose to. And I assure you, the cost of living in Thailand is one fraction, very, very small fraction of what it costs to live in Southern California. So I thought that was very interesting to see that pending home sales number so much higher than normal. I was just I was very interested to see that one. I think based off of that, I was actually expecting to see our market surge a bit more. So let me start there. We'll start at the bottom, which of course is just this choppy garbage that we see with cryptocurrencies. Who knows, maybe Lagarde will say something tonight or tomorrow morning, which could spur this one even more. But Bitcoin down 1.95% on the day. Now, that isn't necessarily on the day. Remember, the futures markets are not taking into account the weekend. So this will look like a big gap from Friday. But down 1.93. We move our way up there. A slight down 0.58% right now for the NASDAQ. But you can see it was a fairly compressed range after Friday's huge rally. So I'm happy to see that. As you guys know, I told you I did short some NASDAQ 100. I shorted the triple Qs. This is the one that really surprised me. If you guys notice the daily on the futures here, there was a fairly decent big red candle, right? So gold over the weekend was starting to rally up. When it opened up, had a gap up, and then sold off. So it's a big red candle, but it was only down 0.36%. Now, why is this so important? Well, for me, it's really important because the G7, and again, those countries, you're talking Japan, US, Canada, France, Germany, Italy, and the UK, have all said, we're going to ban Russian gold. So I'm actually building a video for OTA right now talking about supply and demand methodology. And if you have a situation where any commodity is now limited, meaning supply chain disruption, that should have an impact on price. So today, Russia exports a lot of gold. And the talk track was that the G7 countries are going to ban Russian gold on top of all the other sanctions. And that should have done what to the price of gold? Surprised that it did this. I actually really thought we'd see this thing surge today. Was kind of optimistic for it because that might impact silver and some other commodities as well. But we actually had a down day for gold. So I don't know what to make of that. I really expected gold to have a nice rally today on the G7 ban. Of course, G7 is also meeting tomorrow. So we have ongoing discussions with the G7. Who knows what else they may throw at Russia in the next couple of days. But all in all, not very good. Now, did I have any other economic announcement stuff? No. So let me go to this question from Les, which I think will allow me to expand on the Zdorovie topic for today, which is, if Russia is in default on its debt payments, if it is, what does that mean? What might happen to Russia? Okay, let's be very clear. Russia has the money. There is no question that Russia has the money. The question is they can't access the banking system because the people that they're supposed to be paying have said you don't have access to the banking system. So I hate to say it. I think we give Russia the villain treatment, right? Like they're nothing but evil. But in this case, they've kind of been handcuffed. They've got the money. They just can't make the payments, right? It's kind of like your mortgage company calling you saying, hey, you're in default and we're going to repossess your house because you haven't paid us. And you're like, well, the bank froze my account. I can't do anything. It's even worse than that because the mortgage company in this case is the bank. So here's the Western world saying, you're not making your payments to us. You're in default. Well, Putin's over there going, I have the money. You just will not let me pay with the money that I have in the bank accounts because you control my bank accounts. I kind of feel bad for them in that sense. Now, Les, he says, what does it mean if it can't make their payments? I'm not sure. I don't think it's going to be that dramatic because Russia has the money. It's just how does that money get out of those accounts now and go back to where it should be? So I don't know. I don't think that this is the end for Russia. I really don't know. I'm not a geopolitical analyst, but I do know it's created a lot of turmoil. And surprisingly, it is the most powerful currency since the beginning of the year. You look here at the ruble against the US dollar. I mean, that is a monster run-up. And it was interesting because I think when this market was selling off, there were a couple of you that were going, short the ruble. And I was like, yeah, don't. Just stay away from it. It's too dangerous. For all that negative press, you think ruble's just going to get absolutely screwed, right? It does this from 135, dropped all the way down to 80, almost a 50% decline, and now it's over 100% gain from those lows. So pretty crazy to see the value of the ruble. But, put into perspective a couple other things. Russia is a major exporter of oil. And I made this argument many, many times. I'm sure maybe you guys can give me yep, I remember that statement when I said, if I'm OPEC, right, if I'm oil producer, do I want a high price for oil or a low price? And like, oh, well, you want to keep a low price because people will keep driving. Look, people are going to keep driving. People are driving with $3 a gallon gas. People are driving with $7 a gallon gas. Does it put hardship on some? Sure. but they're still going to drive, right? I don't see any of my colleagues or friends going, it's too expensive, I'm running the bus. No, maybe an electric bike, right, that you bought from me. So going forward, Russia is now in a situation where the barrel of oil that they sell, they're getting significantly more money for it. Here's the chart of crude oil, right? And let me go back to the ruble here real quick just to show when those sanctions really started to hit, right? That was, let's say February of this year. And if we look at what's happened to the price of crude oil, go back to February of this year, we were down at about 80, right? Let's call it 90. Well, it spiked up to 130. So all of a sudden, they're selling fewer barrels of oil because obviously they're sanctioned against them. But the oil they are selling is selling for a much higher price. This, to me, is the dream for OPEC because there is peak oil, right? There is only a certain amount of oil under the ground over there, whether it's Russia, whether it's the U.S., whether it's the Middle East, Saudi Arabia, who cares? There's only a certain amount of oil under that ground. It isn't this perpetually producing well that will just never dry up. It's going to dry up. So your goal, if you own one of those oil wells, is to sell oil as high as possible so you can sell it as long as possible at the highest price. It's kind of weird. It seems like it's been a win-win for Russia here, except for this default issue. And I got to be honest, I don't know how that pans out. All I can tell you from my perspective is I'm not gambling on that, right? I'm not playing the ruble. I'm trying to stay away from any Russian companies, which I don't really get involved with anyway. So yeah, I don't know. What did you say there last? With strong ruble, their exports should be more expensive to buy. Right, but nobody's buying their exports. They're banned from pretty much everywhere and sanctioned, so not that big of a deal. Remember, what's their main export? You're not buying a Russian television, are you, dear? Are you buying yourself a nice car from Moscow? No, you're not. You're buying timber. You're buying crude oil. You're buying maybe diamonds and gold and silver. You're buying commodities, all right? So they are still selling it. Again, you look at the G7, and that's just a small select group of countries. To me, the only logic I can make as to why gold didn't surge is, let's say I've got the EU. So I've got the European Union, and out of that EU, you have Italy, Germany, and France have said, we're not going to buy Russian gold. You cannot buy Russian gold in our country. Okay, great. So let's say I've got Spain. Spain hasn't said that they're going to ban gold purchases from Russia. So Spain's buying all the gold, and they'll just sell it over to Russia, sell it over to Italy and France and the other countries that have said no. So to me, I don't know. It's the only reason I can come up with why gold didn't just surge today. It actually sold off. So anyway, I'm on a weird little bit of a rant. Yeah, right, Margaret. And also grain, right? And I was, apologize for any of my Russian friends watching. I was actually a half-assed Russian accent. I can actually do a pretty decent one, but I'm a little too hopped up on caffeine today, so my accent's sounding a little bit different. Big Ed says, Merlin, why not hold on to it and rent it out? Keep the asset while it rents. Rents are raising fast, and the crash. First off, let me get to that in a sec, Big Eb, because it was just going to kind of pull me to a tangent. I want to make sure we finish up with the Russia thing today. The other piece that was talked about from the G7, which I don't know how this is going to work, is setting price controls on Russian exports. So, for example, crude oil, right? We are still seeing oil come out of Russia. Obviously places like Germany and Europe, it's key to have that oil from Russia. So, it's kind of this, I don't know, to me it's a stupid system where we're like, you're bad, we're going to ban all this stuff, but we really need your oil, so we'll let that come through. But everything else, we don't need the gold. It's not survival. Damn you and your gold, but we'll just keep that oil coming through. If you really wanted to be a disruptor, Putin should just be like, I'm cutting off all oil to Europe until you guys open up our bank accounts. You would get a lot of pressure from countries around the world to resolve some of the financial system pieces. Anyway, when I look at Russia and you think about price controls on crude oil or some of the other exports, I don't exactly know how that would work. If Russia's saying, hey, we're going to sell these barrels for $90 a barrel, and the U.S. or whoever the G7 says, well, it's only worth 80. I honestly have no clue how that would possibly work, but I'm going to try to listen to some or read some of the comments from the G7 meeting that will outline kind of what they're thinking about with price controls, because that was the big one. So anyway, there we go. I got Russia out of the way. Zdorovie to anybody who's drinking out there. The ones who really loses out on all this, I don't think it will be a default by Russia. They have the money. I think the ones that are actually getting hit by all these tariffs the most aren't the ones that it should be hitting. It's going to actually end up hitting the average person in Russia, the average citizen, not your oligarchs, not your big uppity-ups, right? You've got this totalitarian regime over there in Russia. The people at the top are fine. They got their money. They will just pass on the suffering to the people below them. So sadly, the people who probably don't even want this war and are totally against this war and would rather just have peace, they're the ones that are going to get screwed by these sanctions. But what can you do? All right, let's see. Same thing happened to Iran in the 1880s. Silly world we live in by getting run by this junior. It is a weird world, OG. You know, we had a lot of conversations. I'm sure you did as well over the weekend, regardless of which side of the aisle you sit on. And again, I don't want to make this show a political show, whether you're Democrat or Republican, liberal or conservative, left or right. I'm sure the conversation around a lot of people's watering holes was, you know, about the repeal of Roe versus Wade, and now all of a sudden they're talking about going after same-sex marriage. And I forgot who it was. I think it was Samuel L. Jackson put a meme out of Clarence Clemens and his wife, who apparently is white, saying, "How about you ban interracial marriages?" Right, just as an exclamation point, like you're going after, you know, same-sex marriage. I mean, it's just kind of, we're getting out of hand here. All of these topics, well, in my opinion, are going to further polarize and fragment the United States, what your belief systems are. It's unfortunate because I think the tension's going to continue to escalate. Now, as a citizen, it bothers me tremendously. As a trader, I love the volatility. I hate the reason we're going to have it, but I think over the next few months, guys, we're going to see a lot more volatility. I mean, you look at these price charts, they haven't been really out of the ordinary. We've seen some strong sell-off, some strong down. Let me get rid of that yellow box. Here's the Russell 2000. Let's go to the S&P, since that was what I was going to talk about next. You know, you're seeing fairly decent downtrends. You're seeing certainly some big volatile swings, but given more unrest, and I guess what I picture would be more of a destabilization of America, you know, I kind of think that this is going to continue to drift down even more, and that's on top of the economic data. That said, we can't always be negative on this show. If you look at the price of commodities, so I'll run through here a bunch of commodities in just a second. If you look at the price of commodities over the past few months, we're talking significant. I mean, monstrous declines. And of course, what does that mean? Well, that means that General Mills, who's going to be reporting this week, I think they report on Wednesday, you know, they might all of a sudden start to show a little bit more profits. Why? Well, let me show you some of the commodity prices, and we will go, let's see. We'll start with natural gas. I'm just going to run through them rather quickly just because I want you to see from a percent perspective how much things have fallen. And these are rough numbers, but you guys can see that natural gas has fallen 33% in exactly 18 trading sessions. That's huge. Now, let's go look at things like soybeans. Soybeans have fallen to the closing price of today, 14% in a period of 22 days. We could go look at things like lumber, which has been just unbelievable. I mean, what did I do? I have no clue what I just did there. Anybody who trades lumber, you know, this is just an unbelievable chart. We are down on lumber from that peak that we saw. Why are you not letting me draw a line? Okay, we're down roughly, get it, rough lumber, roughly, but I'm dumb, 56% in the last 78 trading sessions. So that one's been trending down a little bit longer, but still pretty significant decline in value of a lot of that. Yeah, wheat's on there. Let's get to corn, because corn futures over the past couple weeks, at least the last week and a half, you've seen it fall 7%. So not the biggest decline, but off its peak that we saw back in April, you're down in 38 trading days, about 10% on corn. Wheat, now we've got the big one, all right? This is a huge decline in the price of wheat. I'm going since May 18th to where we are right now, 28% decline in a period of 27 days. So what's going to happen is these are obviously going to pass through to a lot of the bottom lines of companies. Now, I don't exactly know how long that will take, but it would not surprise me at all to see the next month's reading of CPI or the PCE Core Price Index, which comes out next week, come out way better than expected. So I'm going to watch this market this week. I may actually close out my short positions just because I'm a little skeptical that core PCE price index number coming out later this week is going to be much better than expected. And then all of a sudden the media is going to go, oh, recession's off the table. we're stuck in this weird quandary of data, right? I can look at Wednesday's announcement for GDP and say, that's going to be a negative number. Now they're going to be singing the praises of recession. And then you can look at the core PCE price index and say, oh, inflation is totally under control. Well, now all of a sudden the market's going to be really volatile because what do they know? Nothing. Now they're totally confused. Here is the cotton chart, which is probably the most profound of all of them, especially over the past couple of weeks. Cotton is down 39% in, 36 trading days. However, it's really the last 7 days that are incredible. 34% slide for cotton in the last 8 trading sessions. So, this is going to pass through from an inflationary perspective. So keep that in mind as we look at these inflation numbers next week or this week. Could be a shock. Could be a shock to the system. And, you look at where we're at right now. I was anticipating personally a rally up. I thought we'd go a little bit higher here and then see that drift down. But just from a pure risk management perspective, I've got a little gain on some of my options I purchased, just slight, no big deal. We'll see what happens over the next couple of days. My goal would be to try to close those out by the time we get to the PCE numbers. I think the GDP number will actually be better than expected, but still negative. It's just that core PCE to me is a big wild card right now. I'm watching how much those commodities have shifted. And, the interesting thing is I don't hear much on the channels I follow talking about how much commodities have dropped. When you have them drop that much in a short period of time, that's going to relieve a lot of the inflation pressures. Now, I don't think that we're out of the woods. I don't think inflation is out of the way, but that's certainly... Is cotton limit down? Yes. Not only is cotton limit down, but it's been like limit down almost every single day. Check this out. Let's go to the cotton chart here. So you had it lock limited down earlier in the session. I think, let me go real quick. You can check, here's how you can tell if they're lock limit. Do you see how price is stuck? Right? When you have a chart that looks like this, it's frozen. So right now, buying cotton, a lot of people say, oh, great, it can't go any lower. Careful. Because if you bought it right now, you can see there's no candles forming. These are all 5-minute bars here, and it's not doing anything, which means it's frozen. It's lock limit. Nobody is buying cotton, and I mean nobody. I could probably bring up volume here, and basically you have people buying, but it's at the lock limit price. It just has not moved up. So you have massive selling going on in cotton. People are buying, but at the lock limit, and those people could get absolutely destroyed. If this thing opens up again, lock limit down, bad news for anybody who obviously is holding long. And you can see, I thought we lock limited down a few more times on cotton. It's not showing up in here. But yes, we're lock limit down because people can't afford clothes right now. No, it's because there's an arbitrage between cotton from the U.S. and cotton from, let's say, Brazil. Right? Cotton from South America is going to be cheaper, partly because that U.S. dollar has soared so much. And, I'm hoping that you guys find it as fascinating as I do, the inner workings of all this. So here we have, let's say, the U.S. dollar. Let's bring up a chart of the Dixie. Make this on a daily. Because we've seen this U.S. dollar surge so much, anybody buying American cotton has to technically pay more. And I know what you're thinking. You're like, well, no, they don't. $10 a bushel is $10 a bushel. No, because the dollar keeps rallying. The price of that bushel may be $10 US. But the person converting from, let's say, rubles or euros to dollars now has to take more euros to buy the same amount of dollars. Like, let's say, for example, here's Euro USD, right? Here's how many euros it's taken to buy, how many euros you get, how many dollars a euro will buy you. And the euro's just been tanking. So I think it's a great time to be alive. I find it absolutely fascinating how all these relationships work. So that's why you're seeing OG cotton, I think, sell off is now they're just saying, hey, we're going to get instead of buying cotton from the U.S., we'll buy cotton from Brazil or another producer. Mr. MyPillow is buying cotton from... Oh, man, Mr. MyPillow. How did that clown become such a powerhouse in the world? I don't get it. I get it. We all need pillows, right? Would those prices show up that fast in the PCE number? That's a great question, Big Eb. I just don't know. When I look at things like a Fed rate announcement, right, like a 50 basis point increase or something like that, it always takes a while. 60 days, 6 months, 9 months, a year to really impact a business's bottom line. Now, some of those commodities like lumber have been falling for, 6 months or so. Others have been a couple of months. So I don't know if it'll be in this, if the full brunt of it will be in there. I don't think the full brunt of it will, but I do think you're going to start to see it impact inflation numbers either this meeting, most certainly the next meeting. That's right. He's God's pillow man. Show lumber, please. I'm sorry, Margaret. I don't know if I did that right there, but let me go back to the lumber chart here just to show you that one. The lumber one is just gorgeous. I mean, I don't trade lumber, but man, look at the volatility of this thing. I mean, that's just unbelievable what's happened with lumber. I mean, back in 2020, let's call it right as COVID hit, we fell to lows right around 300. Yeah, we're sub. Let's call it 280, and just a year later, we're up at 1,700. I mean, that's just insane. I mean, there was like a black market, like people were stealing from construction sites because lumber was just now like gold. Then all of a sudden, it fell from 1,700 all the way back down to 460, and then it spikes back up to 1,300, and now we're back at 580. I mean, this is just an unbelievably volatile instrument. I don't trade it because it has really weird trading hours and contract specifications, and it's not the most liquid contract in the world. So I kind of stay away from it. Let's see. Do you think the interest rates will continue rising? Joe, that's a damn good question. I am no oracle. I mean, I wish I was. I think that what you'll see, and this is just my speculation at this point, and I could be completely wrong, and if I am, I will be making trades with my own money, so do your own due diligence. But my thinking is that if we see inflation take a big dip, and at some point the data, core PCE price index or CPI or PPI numbers should start to reflect that super sharp decline in commodities. Once that happens, then the Fed is immediately going to say, we see a significant decline in inflation and feel much more comfortable that we can now get it back to 2%. That's going to be their talk track. Mark my words. Record this this audio bite because that's what Jerome Powell will say. Inflation is definitely moderate, become a little bit more moderate as opposed to elevated. We are on target to achieve our rate forecast of 2% by blah, 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 blah. That guarantees going to say that. That said, if they do start to see commodity prices drop significantly, then yeah, I think that the Fed funds rate could significantly be impacted by that. Let's go and look at the Fed funds rate right now. I'm curious to see, based off of some of the numbers that came out today, in the next meeting, which is 29 days away, has it dropped at all? And it has not, right? It's actually increased that we're going to see a 75 basis point chance. I personally think that in the by next Monday, all right, by next Monday, I think that this is going to decline. I think you're going to see the odds of a 75 basis point increase decline and really start to focus maybe on the 50. That's just my guess out there. And again, use it for what you want. I'm not a financial advisor. It's just my opinion. But I do see inflation taking a dip in the next few months because of those commodity prices. It's just, I don't know how you can, unless you're a stupid business and going to try to keep prices high. I mean, this is going to help out your business a lot when you see prices dropping like this. I mean, this is monstrous declines in commodities across the board. Only thing that's not dropping, gold and silver. Thank goodness. Here's copper. I mean, look at that chart. Copper, 13 sessions down 20%. So who does this impact? Right? Who's this going to help? Toll Brothers, Lennar, KB Home, anybody using copper, new construction, infrastructure, going to be benefited by that. You look at nickel. Right now, nickel hasn't had that colossal drop per se. It was like this big anomaly here back in March of 2020. But if you keep that trend line going, this one's actually kind of back to where it should be. How about palladium? Right, palladium been on a pretty significant decline as well. I mean, this one's been very consistent all the way back to March of 22. So, go back 6 months. We are just drifting lower and lower and lower and lower. I mean, we're down over just about 50% on palladium. Platinum, got to get those catalytic converters. It's also nosediving. So, it's across the board. The only one that feel like they're kind of holding, at least for the short term, is gold and silver. Bonds and interest rates are inverse of each other. Correct. Yeah, so if you see the price of a bond fall, the interest rate's going to be the opposite. I'll give you one real quick example. So here's your ZN. This is the 10-year bond. And notice that it's been declining. That's the value of the bond. And the interest rates over that same period of time are increasing. So they're just the exact opposite. The interest rate goes higher as bond prices fall, or vice versa. Do you think what is the best way to trade lock limit and be on the safe side since it's capable of blowing an account? You know, this is a very, very tough question. So I did this. If you look at TraderMerlin's archives, I did a show called Lock Limit, which explains more about lock limits. And I did go in there and talk about kind of how to trade them. I'll tell you this. They can be extremely dangerous. They could be literally, when they open up and gap down again, lock limit, your account is blown and liquidated, right? And you may lose more than you had. You can lose more money than you had in the account, because if it goes lock limit and you're leveraged to full, you're toast. So you're seeing them raise margin requirements for a lot of commodity futures contracts because of that volatility and potential lock limit. So personally, I don't believe there is a safe way to trade them. Let me see if I can get my pen working, because I'm not going to say a strategy, but this worked for me very well during the President Trump-Hillary Clinton election. It was an awesome trade, if I do say so myself. So let me see if I can get this pen to work. I'm not sure why my pen decided not to work for me. Huh. Yeah, I guess it just does not like my pen today. Very bizarre. I guess it's just not on. Hello, hello. Well, that is the weirdest thing ever, guys. Yeah, we're better now. Let me know, right? Am I better now? Just give me a little yes that I am better. I think I am, because now my volume's popping. I'm not sure what happened there. Can anybody hear me? Yes, I lost sound, but I'm waiting for you guys to hear me. I don't understand exactly what happened. You guys are funny. Yeah, no. I don't know what happened. I guess when I was trying to fix my pen, it just all went muted. Thank you, guys. You're awesome for letting me know that happened. Otherwise, I would have kept on going. No, the mic wasn't on mute. I literally unplugged my microphone and had to replug it back in, but there we go. Okay. Now that I'm sweating because of nervousness. Shit, is it an hour in the show? It's only 35 minutes. We got plenty of time. You guys are awesome. Thank you. Okay, where was I? Let's go back to the talk track. So we were talking about, let's just say this is S&P futures, right? So here's the chart, S&P futures. And let's say lock limits down right here, 10 minutes into after hours trading, right? So the market's closed, and you can't trade SPY, can't trade the triple Q, but you can trade futures. And yeah, was it my pillow guy? It's probably Donald Trump, because I was just about to go off on DWAC. Somebody asked me about his SPAC, and I'm like, does it surprise you that thing tanked huge today? So if it lock limits down 10 minutes into the after hour session, remember, you have this huge window of time for it to unlock limit. So in the past, I have actually gone long off this lock limit. And I don't do it with a lot, but I do for a reason. I'm assuming that between now and when the markets open back up, and let's just say the regular market hours, right? We'll just say the equity markets are open from 9:30 East Coast to 4 p.m., right? So from 4 p.m., so you got 4, 5, 6, 7, 8, 9, 10, 11, midnight, 1, 2, 3, 4, 5, 6, 30. I have 15 and a half hours. I have 15 and a half hours where that market is just closed. That's how big this yellow box would be. So if it's the first hour, I'm okay with going lock limit down only on indexes, guys. I'm not going to do this on a commodity. I just don't have the cojones for that. But if let's say we're right here, and it's I'm right near the morning and it's lock limited down, it's still lock limit down, I don't have time on my side. It's kind of like buying options. If I'm buying options, I want to make sure I have a lot of time. Well, if I'm buying a lock limit, first off, for me, my rule is it has to be an index like S&P, NASDAQ, Russell, or Dow. I'm not touching commodities, just a rule. So that Obioma, that's kind of what I would say there for trading those ones, because what happens? If you buy it right there, all of a sudden, next morning, oops, go C, Control V, you could open up down here as soon as that market opens, and you're screwed. And it's lock limited again. So if there's an absolute panic or a run on a market, danger. So one of the trades I loved it. Honestly, it was nerve-wracking, but it was also one of the easiest trades I may have ever made. Hey, Don, good to see you, my friend. Was during the Trump election, after hours on that night, on election night, we lock limited down right after the market closed. The market just started tanking right away. As soon as the polls were coming in that Trump was leading, went lock limit down. And I had a whole bunch of puts on the market anyway. So for me, it was awesome because I had puts on the market and I had shorted some futures. When we went lock limit down, I just closed out my futures because I'm like, well, how much lower is it going to go? And I said, you know what? I have 15 and a half hours until this market opens up again. I know there's going to be some bounces. And so I loaded the boat long and it just kept bouncing. And I would, in the little rallies of, let's say 15, 20 points, I would just sell off all of them. When it came lock limited down again, I'd buy them and do the same thing over and over again. And then as the night went on, I just said enough. I had a very good evening just trading the lock limits. But it's dangerous. I mean, it is one of the more dangerous things you can do, especially, hell, look at the price of, we were just looking at cotton, right? Look at CT. Do you think that at any point, let's be very honest here, do you think any trader over the past week has had a good opportunity to get out? It's just gone lower, lower, lower pretty much every single day. Here's the hourly chart, just so you put it into perspective on how beautiful this downtrend is. There's only been a couple little bounces. This one right here that happened on the 22nd, right? You have a small bounce. Other than that, this is just lower lows, lower highs all day long and barely any time to get out. So careful with lock limit downs. Merlin, what's the best thing to be in when stocks and bonds are tanking in a 401k? How do you take advantage of high interest rates? Well, if you are of the mindset, if you're talking about 401ks, very different. Because in 401ks, you're generally only allowed to be buying the mutual funds they give you. So you might have 20 or 30 to choose from. They're generally loaded with fees that you don't even know about. So I personally would go back and I would try to put, just the minimum or the maximum you can in your 401k, but then go self-directed so you can go long and short and buy all sorts of other things. Now, if you are in a 401k, your question's very valid, right? Well, equity markets are tanking. Maybe I don't want to be in equities. Bond markets, not looking very good either, so I probably don't want to be in bonds. Real estate's looking good, but it's just about to roll over. So you have the big three that you would normally say, here's where I'm going to go in certain market situations. Well, now what? I would say that the safest thing, Jeff, if you just want to appease your angst, because there's probably some anxiety here with these markets dropping so much, is you can just go into a money market fund. You can go to a cash. I think they call them a stable fund, depending on what your mutual fund, your 401k provides you. Most of the time, it's going to be a money market fund or a short-term government treasury. Like it'll be, buying one-year bonds. That might be the safest way to go, just to kind of, you're not going to be beating inflation with those, but you're also not going to be riding this thing down if we do drop another 10, 15, 20%. Although, again, with those commodity prices falling as much as they have over the past 3, 4, 5 months, we may see this thing level off here and start to move back up. People have priced in a lot of fear. So personally, I would say where to go to in a 401k, cash. You can't really go inverse. And a lot of people would say, oh, well, you go into things like utilities when markets crash, right? Yeah, but if the S&P drops 50%, do you think that XLU is going to be positive? No, it's going to be negative. It just won't be negative, or it most likely will not be negative 50%. It might be negative 20%. Well, just go to cash, right? Go to cash. There you go, Jeff. Hope that helped. Let's see. I think that pretty much did it. Now that I've screwed up the show by somehow disconnecting my microphone, and I had to reset my power here at the house, and I think that's what screwed it up. So I'll have to do some tests on this computer in a little bit and make sure that it's all good to go and get my drawing tools back for you. Let's see. I do believe, let me real quickly check my calendar here because I'm not sure whether it was for today or tomorrow. Okay, it's for tomorrow. So I guess I don't need to go there. I'm going to have Trey Lazaro on the program tomorrow. So for those of you who do trade futures, I know we've got some people here at TradeStation futures people, some of you trading on different platforms. I'm going to bring on my friend Trey tomorrow to talk about, I guess, the subtle nuances between platforms and what you should know. I trade with Trey, and I think Trade Pro Futures is probably one of the better futures platforms out there. So I would definitely encourage you to listen to that one if you have any interest in futures. And then if you have futures questions, put them down below the YouTube video for today. So this is the Zdorovie show, the Russian crisis, which should be interesting going forward, but it's just more of a soap opera that we're all involved in. Put it in your comments down there for Trey. Anything to do with futures, I will field those and get those all ready for Trey on tomorrow's show. And hopefully we can have some fun with him and learn more about the futures markets and lock limit downs and things like that. For those of you who are trading commodities, remember, there are a lot of rules with futures, and each product has different lock limit structures. They have different trading hours. They have different contract specifications and deliverable or not. So, be very careful. Marlene, you turned me into a gender equality day. No, I am definitely binary. I know my sexuality, but thank you for that, Alexander. Merlin is the name. What's a good stock or ETF for a bear market? We could do a whole show on that. Like literally, we could do an entire show on what is the best ETF for an inverse market. I mean, maybe I will later this week, but I'll take it at a high level, Alexander, and say, first thing I would look at is say, well, you have to take a step back and say, how do I think the overall market's going to perform? Once you have that assessment down, you say, okay, this is how I believe the market's going to perform. Then I would break that apart and say, which sectors do I think are going to perform the weakest? If you are somebody who wants to just kind of hands off and like, I just want to short the market, just short SPY. But if you're a little more addicted to the game, if you will, and really like breaking things down and looking for opportunity, you might look within the S&P 500 and say, let's say I got 12 different ETFs that represent market segments like energy or healthcare or consumer staples, etc. Find out which one of those might be the worst performer of the group and go for that one. Or as Larry says, you could use leverage ETFs, SQQs, right? Problem is, with leveraged instruments, if you're wrong, you can be very wrong. All right, so that's a bad thing. And the longer you keep a leverage ETF, the more it will inherently decline. So let's say you bought a triple inverse SPY, right? And you held that for 6 months, and it's right back up. The SPY is right back to the exact number that it was 6 months ago. Well, your triple leverage ETF is not going to be back to where it was 6 months ago. It will be significantly down, and I can show you that one as well. No problem, Alexander. We'll get there. Yes. Well, it was kind of one of those terms I just find very humorous. Is someone says I'm non-binary, as a gender. Non-binary. No, I'm definitely binary. I know exactly what my gender is. I'm clear on it, but some have issues. I still believe TradeStation is one of the best trading platforms out there. Not perfect, but none is. Agree with you, Pepe. Absolutely. TradeStation has a lot of benefits. What I think you'll find from tomorrow is TradeStation's fee structure is a bit high. Their margin requirements are very high, and you have their platform, which does have some really good features to it. Trey has several different platforms, so you can kind of pick which one fits you the best, which I think is a really cool thing for a futures firm or just a trading firm to provide, is the ability for you to look at a market and say, all right, this platform for me works better, whether it's more of a visual one or it's more of a programming software, right? Because not all of us look at the same platforms and go, ooh, this is great. For some, it's overwhelming. You want something very simple. All right, that's going to do it for me. I've got to go put in some work in the yard, lay some water lines in the backyard so the dog watering bowl is going to be automatic and I have to keep feeding it. So that will be the show for tomorrow. It will be Trey Lazera of Trade Pro Futures. I will reach out to him right after the show to make sure that he does come on the program for tomorrow because we all tend to forget. Again, if you have comments, questions, put them down below the YouTube video or you can email me. Name is on the screen, TraderMerlin@gmail.com. That said, sorry for the mistakes and little errors in the show today, everybody. The audio works and I will do a test right after. Thank you so much. I will see you all tomorrow. Take care.